Good afternoon, everyone. So today is the TCS, yesterday was the TCS result. So let's have the result, what to look and what not to look. Let's have a detailed vision. This is for educational purpose. Just take it your own decisions before making any decisions from this video. So what to be expected when any company results are announced? Is it revenue? Is it PAT? Is it depreciations? Is it interest? Is it company reserves, debtor ratios, cash conversion cycles, ROCE, shareholding pattern? Yes, all are important factor to be considered. Not only looking at the PATs and revenues, you should not supposed to take any positions ideally. So let's have a detailed look on each. So we have taken an example because yesterday was the TCS results. So that's why we have taken TCS as a results example. So from this slide, what we are going to take away, whether sales is increasing every quarter, ideally sales should increase, and as well as in yearly wise also. So if we see previous quarter, sales was 58,229. And now they've increased to 59,162 crore. That means they have grown the sales. And YOY, last year they have done 191 crore, 191,000 crore, and this year they have done 225,000 crore. That means, yes, the sales is good, increasing. This is one positive sign. Second, operating profit and margin. Yes, this is also one of the major role. Whether operating percentage margin is stable or reducing. Stable means, look at this, 26%, 27%, 27%. It's good, stable. They are maintaining since 2020. They are maintaining this operating margin is very stable. That means it's a good. Okay. So when it comes to operating profit also, it happens, but operating margin percentage you have to look after. Okay. And here, yearly also you should look for, it is operating margin is stable. So you should say it is also good for increasing your stock prices. Now let's come to interest and depreciation. That is, which is like a portion of EBITDA. Interest earned before interest and depreciation taxes after this one EBITDA. So takeaway from this is interest and depreciation both has to be reduced. See, ideally interest is last quarter they have paid 160 crore and now this quarter they are paying 272 crore. So that means interest is increasing. So this is a bad sign. Investors want to know why exactly they are paying more interest, right? And depreciation last quarter was 1,269 and it is 1,286 now. That means depreciation is also increasing. That's also one of the bad sign. Okay. So depreciation is increasing, which is eventually affect the stock market to go down. Maybe because of that reason, stock is going down today. Yes, we have to keep a watch on this. And if we see yearly depreciation, last year was 4,604 crore and now it is 5,022 crore. That means depreciation has increased again. So keep a watch on this, why exactly stock is falling today after even posting the good results on PAT and as well as everything, right? So next, profit after tax. Yes, everybody will watch directly this. Oh, profit after tax, they are good. So what to look on profit after tax? It should be growing consistently. Yes. December was 10,883 crore and now 11,436. Definitely they have grown. Undoubtedly, it's a good sign. And last year 38,449 they have done, and this year almost 4,000 crore they have grown. This is again a positive sign. Okay, so this is what everybody will look after. Okay, YOY and QOQ, but we have to look after other parameters also, like investors. Retailers always look only, oh, PAT is good, then I'll invest. Oh, PAT is bad, okay, I'll exit. No, don't judge just by looking at the PAT and just by looking at some sales revenue. Don't take any decisions. Have your own analysis before getting into any longer positions. Okay, so PAT is one important factor. That doesn't mean that it only dictates everything. It's one of the factor to dictate. Coming back to earn per share, yes, EPS is going good. Last quarter was 29.64 and this quarter is 31.13, and year over year also is growing from 104 to 115. It is good. EPS is good. That will also command a parameter of growing stock. So this is good point to refer. So yearly reserves and borrowings. See, yearly results, sorry, reserves 90,058 crore and last year was 88,773. So only 2,000 crore has grown. What everybody is expecting, instead of paying 100% dividend, TCS has issued 100% dividend this quarter. Instead of that, if they would have invested back in a reserves and if they would have invested in stocks so that or some any assets, then it should have given more revenues, right? So investors are quite not happy with this 90,058, only 2,000 crore reserves increasing. They were expecting, in fact, more, because if you see, consistently they are increasing 86,000 crore in 2021, 83,000. So likewise, 2,000 crore, they are making it as a practice. Investors might not like it. That's why the TCS prices are not going to the next new 52-week high. It is at this range only, right? So this also was an important factor. They have not much focused on the reserves. And coming back to this borrowings, yes, borrowings is reduced. It's a good sign. So borrowings is reduced, relatively reduced, even less than as even 2021 and as well as less than 2020 also. So borrowings is improving now, definitely. And ROCE, yes, ROCE and debtor days is very much important. Debtor days is increased from 65 to 66. This is one negative factor for a stock to grow. So ROCE, this debtor days should not get decreased. Sorry, should get decreased, should not get increased. Okay, this is one factor to look. And ROCE, yes, it is increasing from 55% to 59%. Yes, it's a good sign. So ROCE is increasing. Return on capital employed percentage, if it is increasing, that's really a very good positive sign. So consider that if ROCE is increasing and debtor days is decreasing, that means it's a very good sign. But here debtor days is increased. So that's one concern for us. So shareholding pattern. Shareholding pattern, promoters are holding usual like 72.3 since many years, or many, at least 2-3 years, past 2-3 years, but FIs are offloading their stake from 13.05 to 12.94. So this we have to see why exactly they're offloading, but at the same time, DIs are taking the positions. So this they're adjusting, but still why FIs are going away? That one ideal way we have to look for why exactly they're offloading the stocks. And coming back to public, public is like not consistent whether they are taking or exiting. They're like quite not confident to consider this public as a shareholding pattern. Even only thing is FIs and DIs and other major investors are considered. Public means we'll be considering less than 1 CR capital investors I'm referring. Okay, now let us see the impact in the charts. 31st March was this candle, right? 31st March was this candle. Market was after this 31st, there will be a sales revenue survey update. After 2-3 days of the quarter, there will be a sales revenue update. Based upon that sales revenue, stock market has gone up. During this time, investors will take the position. After that, what happens? After the result day, market started coming. Why? Because FIs and DIs are offloading their position because they have booked the profits. Actually, our results, retailers are expecting the results to grow, so they are taking the positions and failing. This is the problem. You know what exactly retailers are doing? Retailers are doing result hangover. Like say, suppose if my daughter or if my son gets a result this week or tomorrow is the result, he will be definitely in the like result mode only. What happens to my result? Let me pray God, let me do this, let me do that and all. As soon as the result day, what will happen? The result day, we will be even more tensed. After the result, then we will not be having any hangover, only one small hangover. So the retailers also will apply the same thing here. During the result, they will take the position. After that, they will see, oh, result was good, still my stock is going down. Why? Out of fear, they'll exit and then they'll get into the trap. So don't get into the trap just by looking at the before the result or day the result or after the result. It is just only hype. You just have to take a position either before a week results or after a week results. Don't make any positions during the result. It's only hype. It is like a movie releasing. If any movie releasing on first day theater, it will be very high. Whether because we don't know what is the movie scene, everything, right? That's why always results are trap. So don't get into that kind of a trap because you're talking about an investor point of view. If you're a trader, then that's a different story. I'm talking in the perspective of investors. Okay. After the results hangover, what will happen? Say, suppose my result is over today. So from tomorrow onwards, what will happen? After results hangover, retailers will be exiting from their positions or end up waiting for recovery. They were expecting some good things. So did not happen. They'll take straddle options, that, this and all, but it will not work. And they will exit their positions. After the results, there will be a con call held with company and the investors. Maybe 3 to 4 days or 5 days after that results. After this con call, all question and answers, the results will start working. So after the con call and stock movement will start. You can watch this TCS as an example. After this con call, maybe next week they are keeping the con call. So after this con call, definitely the stock either it is going to fall or it is going to go up. So investors will make a new position after retailers are going away. So major takeaway from con call is to refer question and answer. What is that investors are questioning back to the company and what company is answering? Is there management governance they are maintaining, whatever they are committing? All these things you have to look after. So you can just go to BSE website, you will get the con call update as well. So try to be a smart investor by having the detailed analysis. Thank you for thank you, and reach us at the number mentioned. Don't forget to click on like, share, and subscribe button for more such updates. Also, comment us if there is any improvement to be done, and also if there is any other stocks analysis to be done, we can help you with that.